Happy Tuesday, everybody. I hope that you had a nice 3-day weekend. Today in the markets, the major indexes traded down, coming off of a fairly flat week last week. But the big news last week was on the inflation data. The CPI numbers came out and shows that inflation rose 0.5% in January. And so the good news is that we are down from last year, but the bad news is that we are still well above the Fed target rate of 2%. So there's a little bit of confusion as to how 0.5% inflation increase is a good thing when trying to bring down inflation. And so I think it's important to note that there's a really big difference between disinflation and deflation. And what we are experiencing is actually disinflation, where the rate of inflation is slowing relative to where we were last year. Or in any time frame, could be disinflation. But for us, we're looking at particularly January to January when we look at that 0.5% increase. And this is not the same as deflation, which is when there's an actual decline in prices. So although there is certainly a difference, this disinflation is still positive for the markets. And when we're looking to bring down inflation, and indicates that we are certainly moving in the right direction, and that's what's important. So rates and the Fed remain front and center, particularly after last week's CPI report. And we will continue to monitor the data that's coming out of the Fed and interpret it for you. And while we do that, we, as always, appreciate your trust and confidence and patience. And if you have any questions, please don't hesitate to reach out. Otherwise, we wish you a nice short week, and we will talk to you next time.